Good day all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Tuesday, November 24th, 2020. Now remember, we have a full day of trading tomorrow, then we have the holiday, and then you get abbreviated trading in the futures markets and other markets. So just beware of that and beware the volume's going to fall off after tomorrow. But what a day today was. Today was just a rock and roll day, and it's interesting. The GSA announcement yesterday, where the president had authorized the GSA that they can now brief the Biden transition team. It's the way of saying, okay, this election was won by you. We had heard at first, remember, that if Biden wins the election, you're going to see the markets fall. Well, we had heard that with President Trump when he won the election, that the markets were going to fall, right? You didn't get that. You crossed the 30,000 level in the Dow today. Many of the markets up. I think that part of that has to do, very frankly, with the quality and the blue ribbon of some of the cabinet people that the Biden team is choosing. And those are well-known names. Whether they get through the Senate, who knows? Because, you know, senators, they won't say it, but they had 4 years of nothing but a hard time with the Democrats. Do you honestly think everything's going to go smooth? If you do, you're very naive. That is not going to be the way that it works. So we'll see what happens. As for getting a relief bill sooner rather than later, no, I think it's still later. They can talk all they want, but it's not going to be the easiest thing, and they're not going to slap the president in the face. They'll let him get out of the office and probably take it the next step with the Biden team. So that's my guesses. I don't know. But as you can see, a mixed bag, but power in all the stock indices, certainly, and that was important. So let's go to the marketplace and see what's going on. First off, throw the name off the chart. It's so important that you learn to do that, to take yourself out of the market. So in my brain, I split it down the center. It's not a big brain. It's easy to do it. And I look at the market, and for me, I don't see, if I were coming in out of Mars, is this doing anything? No. This market has been stuck in the same range that it's been at since the beginning of November and not really gone anywhere. That's the first observation. When you take a look at the swing line, which is a proprietary study that I wrote years ago so that I could take anyone, I really believe anyone, and if they can look and draw like lightning bolts on a sheet of paper and say, oh, gee, each part of the downside means that you've got a higher low and a higher high, and draw one striking the earth, they typically go like that on the way down, just like this, as they're coming down in the sky. That's a trend. You don't have one here. You have a lower low and a higher high. There is no trend, and that's what you're seeing in this market right now. It's stalled. When you look at the bias of the market, I need a line to give me upside bias and downside bias. For me, it's the 18-day moving average of closes. When the market is over it, I automatically have upside bias. Under it, I automatically have downside bias. So I have a swing line not trending with upside bias. The resistance is all the way back up at 126.25, one of the resistance points, the upper Bollinger Band where markets often peak at against that number. The second thing is I see support at 119.04, and even if you take out the 18-day average at 119.16 into that support range, you'd have a higher high and a lower low. No trend can be set up just now. When I look at momentum, it's even more confirmation. You have dropping slow stochastics, which implies prices coming down. You have upside bias and no trend in the swing line. So we move to SMH, where it's a whole different world. In this market, you have first on the slow stochastics. Notice that the blue and the red are going sideways over 80 and pointing up together for several days in a row or more now. Got that? That's called embedded, locked in. Until that's lost, markets often continue up, and a potential target could be the 210.84 level, the upper Bollinger Band. I also use window envelopes, but I don't put on these charts all the studies that I use. I do that in my subscriber video in the morning, and there are important numbers there, super important numbers there. But for the simplicity of this video, for YouTube, this is how I do it. if you take out today's low, which was 200.77 in the next, tomorrow's Wednesday or Friday, remember we're not open Thursday, that would give me the idea the market is ready then to come back to the 18-day average. Not taking that out, the market, as far as I can see on it, and I want to show you something, you have an outside day up. If you look at yesterday's range, I think the pros will buy this market on pullbacks right now. Stops under that NARPIT number, that let's call it 200.76, looking to see how hard they can drive it. And that's because you're embedded. Industrials, embedded reading, not an outside day up. Just higher lows, higher highs. There's a key moving average the market was hitting here over and over. My subscribers know what that number is, and we talk about it because it's a number that when you have an embedded reading, if you're looking to be long, that's one of the ways to come into the market. We'll see how high it can go. Got to lose the embedded reading to turn me off on that market. In other words, to turn the market to the point where I think momentum's lost to the upside. In the energy sector, what do you do the first time you hit a Bollinger Band after you've backed away from it and now you're coming at it again? What do you think I'm going to say? I'm going to tell you just what I think. I think the pros take their money off the table. I think they did it here, then they came back in. I think they did it actually here, and then they came in on the break here, and I think they're coming out again. When the market loses the embedded reading, I'm looking for the turn back down where prices start coming back into those moving averages. You haven't lost it yet. QQQ, I don't see a trend. I have a pattern of a lower low and a higher high. When I say the chart pattern is one of a higher high and a lower low. That is not a trend by my definition of higher lows, higher highs for an uptrend, plural on both. The bias is up, momentum is flat. When we come to EFA, the emerging market, one of the favorite darlings of most analysts right now that I watch on TV, it's still in a run to the upside. You've got the higher lows, the higher highs. What did we also get here? This day, I want you to look at the range, 70.01 to 70.69. Here's the day before. You have an outside day down. What did you do? You took out today the high of an outside day down. My rule, doesn't mean it's great, but it's my rule, is that when that occurs, the odds favor the market going to the closest of a moving average above the market, all the main ones are below it, or the upper Bollinger Band. That's what I'm looking for. Where would I be wrong on that? Taking out the most recent low. So if that happened, I'm dead wrong. Some people, and I've even used often, the low of that day again. If it gets back under it, it has no business doing it, and that's a good way to control risk in the marketplace, or one of the ways. Maybe it's not good, it's just another one. In the gold market, you're now between the lower Bollinger Band for the first time, the 200-day average. I would call, if it were me, and I had been short this market, what would I be screaming? Time to take money off the table. What are the odds of staying under the Bollinger Band? 5% of the time, which is saying 95% of the time it won't do it. You don't have an embedded reading, you have an oversold market. Both numbers today were under 20. Yesterday they were not. Just an oversold market. As far as I'm concerned, the pros are going to take some money off the table. Does that mean it can't fall lower? That's not what I'm saying. That is what I think they're going to do. They also are going to look at support between that and the 200-day average of closes. In the gold miners, the 200-day average meant nothing to this market. And when I say nothing, nothing. Now, had it gotten down to the lower Bollinger Band prior to that? No. What did it do today? There you go. Now here, if we take a look, both numbers are under 20, both under 20 yesterday and both under 20 the day before. So this is an embedded reading. Therefore, I do think the pros on the first challenge are taking money off the table, but that stop will be dropped like a hammer. If it wants to just plunge, great, but I don't think they're going to give the market much leeway because, again, even with the embedded reading, you're looking to sell the rally. Why give back what you've got? And the first resistance is around that 35.37, which is $2.50 higher. In TLT, this is a confusing trade. And the reason is, if the economy is going to do better under the Biden administration, between the relief, the infrastructure spending, the COVID vaccine hitting the market, and so on, it's pretty hard to keep the 20-year out bonds and interest rates down. That is the argument. So the Fed, we know that, I expect them in their next meeting to target this in a big way, that they're going to move out and have to control that part of the curve yield in order to keep it balanced. I think that's what you're seeing in this market. It's having trouble holding gains because of that. In FXE, all right, yesterday's high in this market was right here. Let's take a look. Let's get to yesterday, 111.84. You didn't take it out today. If you do, I wouldn't be surprised if you make a run to the 112.38 area. Again, that is my 2-day rule on an outside day down. You are overbought. It would be a quick pop from there. It's about a 50-cent play, but that's what I'm looking for if the market does that. Is the trend up? Well, I could argue it isn't. I could argue that yesterday you made a lower low and you have a higher high. I'll leave it be just as it is until the chart straightens itself out even further. But something that doesn't need straightening out is just what I do in the afternoon. You know, what I try to do, and I did it and I published it just before I did this, every afternoon, Monday through Friday, I put out, and typically, sometimes Fridays comes out Saturday, to be honest with you, but I put out a video that goes in and talks about what the daily charts are looking like on about 40 charts now. And on them, I'm throwing out buy and sell ideas, get out of the market here, do this, do that. It is very, very detailed. We're going to fix this because I'm covering a lot more markets than this now. I've added for the government employees 3 big indexes for them, the DBAs, the DWCPFs, BND. So I'm covering a lot of things that I think they can do. I don't think DBA was at EFA is what they can trade. So I've got 3 different categories for them because they don't get enough coverage for people that are limited in those programs. I'll put that in the ad for you so that you can see that too. The cost of getting this, come on, get serious. It's a cup of coffee a month. I'm assuming you get a bigger cup, that it'd be a pizza, Starbucks, whatever is your blend that you go to. But for 30 days, you get to see if this makes any sense, and you take it from there. How do you get it? You go to our website, go to the word research. You'll see everything we put out up there. It explains it all, and away you go. Can it be simpler? Where are you going to get an analyst of my quality for $8.95 to give you some ideas? If you think you can beat it, go ahead and do it. I get it. In any case, I'm Ira. I will see you tomorrow afternoon. My finger hurts from order entry right today. Not mine, but yours should hurt. It was a lot to do. You have a good day.